Hi everyone. Today let's talk about earnings season, as well as the Russia grain deal, as well as the AT&T and Verizon lead cables, as well as the economic data. Then we'll look at the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sunday, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Moving over to the earnings season discussion, I've been pretty impressed with Finamize, and I think that they're actually a pretty good research tool if you're an investor. But they mention here that earnings are not likely to disappoint because the expectations have been lowered pretty dramatically since the previous earnings seasons. And you can see that displayed here. We're down 15% in terms of earnings per share. From April of 22, earnings per share were around 61.5. And now we're all the way down here to 53 in terms of consensus for the entire S&P 500. And it continues to move lower, which is interesting considering that the stock market continues to go higher. But since expectations are low, they're stating that they think most companies will meet expectations and potentially give better guidance than previously given. Overall, utilities, earnings per share growth, 11%, consumer discretionary, 10%, and then you can see energy as well as materials, healthcare, and infotech expected to be negative from their previous reads on a year-over-year basis. And you can see that displayed here. Q2 of this year is expected to be pretty rough compared to the previous read, but it's expected to improve towards the end of the year and then be very positive during next year, which is in direct contradiction to what we talked about in terms of when the recession is supposed to come next year. Moving over to the Russia grain deal, they have actually pulled out of the landmark deal organized by the UN. Basically, they had been allowing grain to leave Ukraine and be exported to the rest of the world. They produce like 30 to 40% of the world's grain, and this is a huge deal for the rest of the world in terms of grain prices. We could absolutely see grain prices going a bit higher as a result of this. And if they don't come to some kind of agreement, this could definitely lead to higher prices in food. I may also mention here that a lot of these grains go to some of the countries that need it the most, being Afghanistan, Ethiopia, Somalia, Sudan, and Yemen, and that these vulnerable countries will not be getting their grain if the deal is not reinstated. They do mention that wheat prices jumped 3.5% as soon as the news broke, and you could absolutely see that continue to go higher if there is no agreement met, at least in the short term. Definitely something to keep in mind as we go forward. Moving over to the AT&T Verizon deal, as concerns mount over lead cables, they show all of these are in bearish patterns. AT&T down 6.69%, Verizon down 7.5%. And they say both of these companies might be at risk if they have to replace these cables. AT&T price target was cut to $17. They're already at a 30-year low. Verizon stock fell 10% over the last 5 days, and things are not going well for any of them. They say investors have many questions based on this information, and that we're waiting to see any updates on what the financial impacts to these companies could be. Moving over to the economic calendar for tomorrow, don't forget retail sales at 8:30. That's the big one for tomorrow. Not much else going on tomorrow besides that. Moving over to earnings, not much here for today. Looking at tomorrow, we have Bank of America in the morning. It'll be interesting to see how they're doing with all of those bond losses that they're sitting on. Also have Morgan Stanley, as well as Lockheed Martin, Charles Schwab, and Interactive Brokers, most of those being in the morning, Interactive Brokers here after hours. Moving over to Max Pain, you can see we're already above 4 million options. Put call ratio basically unchanged. Max Pain all the way down at 431. Super interesting to see it much lower than current prices. Put strike down at 420, so it could actually drift in that direction. But there are still tons of puts in the market, and I wouldn't expect it to move that far in that direction. Calls, very few, and no really major strikes worth paying attention to, especially considering that we're already up here at 450. And we did talk about if we get a finish above all of the puts, that could put us up around that 453 area for the end of the week, causing all of these put options to expire worthless. Moving over to the charts, looking at the SPY here on the hour and the daily, you can see we rallied up through a wick through this previous high. I was expecting a little bit more pullback here today, but once we got above these levels, I started trading a little bit more bullishly. But right now, you're still looking at a double top on the hourly chart, through a wick, got rejected. We're at the trend line now. You can see that same trend line that we've been watching here on the daily chart. Momentum still bullish on the daily. RSI still going higher today. So we have a new high close compared to the Friday session where we did not close at that high, so the close is better on the daily chart, but still looks like a rejection from that same high level on the hourly. Moving over to the NASDAQ here on the hourly and the daily, you can see same thesis, although we did close at the high above my 381.90 level. I'm trading off of that level. As long as we hold, I will remain bullish. If we break below that level, I'll start trimming my positions. And you can see here on the daily chart, this does look pretty extended. We talked about it in the Sunday video, definitely extended, definitely at trend resistance. But again, that does not mean that we can't go higher. And I'll be using this pretty tight stop here at 381.90. Moving over to the Russell and the Dow, similar thesis, closed basically at the high from Friday's session. Dow looking a little bit stronger, closing above that 345.24 level. Watching for the move up to 347.67. Russell still watching for that 195.15 level. Momentum looking to flip back to bullish going into the Tuesday session. RSI definitely looking weaker, retesting that SMA and then turning back down a little bit. But the trend is still bullish on both of these. Moving over to the equal weighted S&Ps, it's worth noting that the equal weighted did gap down, did rally here slightly. Still holding below that 153.19 level, did not test those previous highs, and momentum is rolling over a little bit. So we did see a little bit of a drop in breadth compared to the regular S&Ps. Moving over to Apple and Tesla. Apple also retesting its all-time highs, looking to break above that level and push up to that 202 area. Tesla doing basically exactly what we thought it was going to do, grinded at this level, rallying up to that resistance. It's got a little bit further to go before we hit that major resistance, pull back a little bit, and then I'm expecting that major push and then a pull back. Either way, still looking at that 302 level. Moving over to Microsoft and Google. Microsoft basically went sideways from the close, holding just barely above my 344.86 level. Could absolutely push back up to these highs tomorrow, up around 350, but you have to pay attention to this level. If it does break down, then you're looking for support at the 21 EMA, sitting down at 340.26. And if it moves through this area, I would expect it to do that fairly quickly, given how low the volume is in that area. Similarly, on Alphabet, wicked these highs, got rejection. We're at support here, and if this breaks, then we're looking for a pretty significant move down to 122.54, or the highly traded zone down at 121.38. Moving over to Staples and Discretionary. Staples not doing much of anything. We saw a nice rally on Friday, ended up gapping down and going sideways, basically holding at that $74 level. Trend pretty choppy now. We've been chopping on top of these EMAs for a while. We're back above the 144 and the 21, but still below the 9 and VWAP. So definitely neutralized here. We've been chopping in this zone for a bit now. Discretionary, on the other hand, continues to grind along this upper trend line. We haven't seen a breakout or a breakdown, so still holding in this area. Could absolutely continue to do this for a bit, but not giving you a lot of upside potential since we're already at that resistance, unless we see a breakout and a push up to 180.10. Moving over to financials and oil and gas. Financials had a great session after the down move that they had on Friday. Financials reported good earnings, and this is continuing to go higher here. Oil and gas also had a bullish day coming off of support at 127.99. And if it holds this 55 EMA, you should be looking for a push back up to these previous highs, if not a higher high at that point, up around that 140 zone. Moving over to breadth. You can see on both of these charts, we actually had a pullback in breadth on Friday and now on Monday as well. Coming off of that resistance line here on the 200, pulling back to support. If this holds, we could absolutely see another push into that area where we already expect rejection. Similarly with the 50-day average, if this holds, push up to that 92.25 area, find rejection at that major resistance, and then we can see that continuation to the downside that everyone keeps talking about. Moving over to the dollar. The dollar actually held over the last 2 days of trading, which is interesting. Momentum slightly bullish on the 4-hour chart. I thought it would be interesting to put this on here. We're still well below all the trends and super bearish on the daily chart, but you can see how extended we are, and it wouldn't shock me if we did see a little bit of a rally, a retest of the 9 EMA, and then a continuation lower. Still need a little bit of consolidation during this period, get above the 21, and then we see that continuation upward, which would push equities down in my opinion. So probably another day or two before we get above that 21 EMA on the 4-hour chart, but definitely worth watching. RSI recovering here slightly. And if we do see a little bit of a push higher, we could get up and tag that 101 area. Moving over to high yields and TLT. High yields rallied a little bit, still below VWAP on the 9 EMA. Momentum still not great. RSI, not too bad. Not everything you would want to see, but not terrible. TLT, moving lower, off of that highly traded zone at 101.73, as well as the 144 EMA at 101.82. This might be a little bit of a bear rally now. As we move down, made a significant low, rallied up, finding resistance, and if this breaks down here and the 21 EMA does not hold, you could absolutely see this continue lower and take out this previous low at 99.11. So watching to see if we get a breakout above the highly traded zone or the 21 EMA here on TLT. Moving over to the volatility indices, both of these basically went sideways today. Slightly bullish on both of them, but not much to say, but not giving us much information quite yet. Moving over to my accounts, I did fairly well. It says I made about 460 on the day. I think I ended up making a little bit more than that. I'm not sure how it quite calculates this, but looking at my positions, I have a covered call. I did roll this 192 out to 193 and rolled it 2 days in time, allowing me to capture a little bit more credit there. I got that for $1.38 for Wednesday. I had my one covered call expire here today. I did not reopen another one. I tried to play some puts on the day, which worked out fine, and then I let that one covered call go. The Qs are actually falling a little bit after hours, and I think I might be able to get a better position tomorrow if we see a little bit of bearishness coming off of that double top. And then I have this 177 call here that's still covered by this $5.69. So it's basically at max profit already. And if it continues to fall, I'll still be covered for quite a bit to the downside. Overall, basically neutral here, looking for the breakout of the double top or a bit of a pullback from that double top and look for some cheaper prices going into the end of the week. Let me know down in the comment section what you thought of the earnings projections or the Russia deal. Is that going to affect the broader world, or is it just going to be fixed in the shorter term? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.